Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar's rally appears to have hit the brakes after challenging the level around 75.25. Still, the market's not quite clear from that level as of yet, but a second attempt could see a rejection, and if so, may see a pullback towards the region of 74.45 as a preferred target, as we are extremely overbought, not from a daily, but also getting close to the weekly as well. If we do see this level hold around 75.25-35, then I feel the market has, in the short term, found a top and therefore could see a pullback in the coming days. The euro, somewhat indecisive of its recent 24-hour trading, and therefore at the moment looks for a further down test, as the MACD is still sort of holding there, but the RSI is still remaining negative. If so, could see a move back to 109.60 with the preferred target of 109.30 before any rebound. And from that, the market may find good resistance around 110.40, and beyond there, the cap that still remains around 111. The dollar yen continues its bull trek and even pushes even higher. And from the rise, the market still remains extremely overbought. I feel the market is squeezing and continuing, and no doubt we are due for a significant downturn due to the recent ADX that's overheating around 70, and as I mentioned, we are extremely overbought. But at this stage, I still remain neutral and await for that bull trap, and if so, could see a pullback towards the region where I've outlined here at 120.20. After the recent challenge in sterling to that top side around 133, the market is just holding in there as the challenge of the midway point on the RSI failed. And at this present, I feel the market can actually go back towards that top side of the range, which is located around 133, figure 15, and reassess from there. After breaking the level of 190 figure for sterling Kiwi, the market has not been able to progress further to the downside, with some bullish divergence still remaining intact. Could see another upward test, and if so, I believe the market should push towards the region of 190.45 and up towards 190.40, and with the objective still around 192 to 194. Gold has finally pushed through the barrier of 1,948 to 54, and now puts on its sight now to $66 a barrel, which may find a little bit of difficulty as the MACD is not fully supportive to this rise. I feel the market, though, in general, has been very whipsawed, and since that base forming around 1,900, the last 2 days have been quite responsive to the upside, but just preparing for the next leg down, and therefore any move from 66 or as even high as 1,980.82, then the down test should come through. Wrapping up with oil, but the market reached its first objective, which was $116 a barrel. And from there, the market has respected this level and backed away very, very sharply. From the rejection, could see now a down test back to the region of 103, with the indicators pretty much weak from the MACD and also the RSI dropping does support this view. Well, that wraps it for the morning. Thank you very much for joining me, but please keep an eye out for the intraday report and the end of the day wrap.